Hi, I'm Patrick Tuttle, the real estate guy with Coldwell Banker Heritage and Legacy Management Services with your real estate market update for El Paso, Texas for the month of July. Here we are on August 9th, 2024 with your report, and I'll be right back with it. All right, so we're back with the report. As always, we're going to start off with our resale homes and talk about what's going on with there. And it's not a whole lot different than what we saw last month. We've got a lot of inventory, climbing inventory just slightly, and then the sales have been kind of flat. In fact, here's what's going on. So sales were down 2.2% year over year from 543 down to 531. Not a huge difference, 12 homes. It's not a whole lot of families out there, but it does make a difference in the market. Months of inventory is up 56.96% change year over year, and we're continuing to see that inventory grow ever so slightly as we've been at pretty much 7% for interest rates for the last year or so, even though we've recently seen a decline, and I'll talk more about that in just a second. Average price is up 4.4% to $282,005, so that's a good number if you're a seller. If you're on the buying side, that's kind of getting to the threshold of that 300 number of what I've talked about over the months of our market, where we kind of see the dividing line between the upper part of it and the lower part of it. Average size of homes just down 1 foot. We were at 1,858 square feet last year. We're down to 1,857 square feet this year, so not a huge difference in that. But the price per square foot went up 2.8% year over year. We're at 148.92, and days on market is 63 compared to 53 last year. I think what's happening here is that we're getting more months of inventory, and the buyers aren't feeling as rushed to make a decision because they have choices today that they may not have had a year ago when we had 57% fewer homes on the market. So it could be that that's what the issue is. It could be the interest rates. It could be that we're in election year. There's a lot of things that it could be, but the fact is that it's taking a little bit longer, 63 days this year compared to 53 last year. That's about a 20% increase in the number of days that we're on the market. Now, on to our new homes report. Kind of the same thing. We've got a widening gap here. It's pretty much the same thing as what we saw last month. Sales are up on the new homes 22.9% year over year. We only had 218 homes closed in the month of July 2023, and this year we were up to 268%. I'm going to come back to that in just a couple of minutes. Months of inventory down 2.6% year over year. We're at 6.25%. Remember, cut that in half. So we're really probably at about 3.125, somewhere in that ballpark of real ready homes that are out there to be delivered to a consumer that they can move into in the next 30 to 60 days. Average price is up 1.1%. That's holding steady there. And the average size home down 0.9%. We're at 1,864 square feet for the average home, new home that was sold last month. Price per square foot continues to rise. We're at $171.94, which that's going to continue to rise as the cost of goods to put into these properties increases, and unless the square footage is going to go down, price is going to go up, we're going to have that inverse relationship on that. And days on market 149 to 135 this year. Again, I think that's probably because the buyers have more choices and they're not feeling as rushed to get into a home. This feels a lot more normal to what I saw in my early years of being in real estate here in the El Paso area. Remember, I've been doing this for 23 years, so I've seen a lot of different things go on, and this feels like the normal market, which would be really pre-2017. That's kind of when our market started to accelerate. Interest rates were declining, and then, of course, we had the big boost in 2020 and 2021 due to COVID. Now, let's talk about interest rates. So yesterday, Zillow was reporting that the 30-year fixed rate on average was at 6.14%. That's a big decrease than what we looked at last month. And I don't know if this is going to be enough of a decrease to get the buyers stimulated to come out into the marketplace or not. Time will tell. We're here at the end of the summer, end of the peak buying season, and we're rolling into the election cycle. And we're going to look at that election to see who's going to be in the White House and how much anxiety that brings to the marketplace, because it does bring some anxiety to people. Some people say, nope, not going to make a decision until after the election. And then they know whether it's going to be a blue White House or a red White House and what's going to happen to the economy, at least the expectation of that. And sometimes this makes a difference. The federal funds rate, by the way, has been at 5.33% for a year now, and this kind of signals that the mortgage bankers and the mortgage brokers are trying to stimulate the activity regardless of what the federal funds rate is, and that's where we see the interest rates coming down. 15-year fixed, 5.52%, and then going down here to the VA and the FHA. Sub 5 on an FHA loan. 4.997. That's fantastic for an FHA loan. VA 5.48%. So if you have the opportunity to buy one of those, that's where your opportunity lies. And with many of the builders that are out there, they're offering incentives to buy down the rates, and they may be able to get them even lower than that. Now, index returns, everything is positive here. So the S&P 500 had a 1.13 over the past month. Dow Jones Industrial 4.41. S&P mid cap at 5.73, and the small cap was at 2.71 month over month. So those are some really good numbers for the stock market. Again, I still like residential real estate because it works for me. Now, my 3 key takeaways for this month. Number 1, market still showing signs of what I call normalization after the COVID-19 pandemic. It feels like it felt back in 2015, 2013, 2011, so forth and so on. Back in 9, 10, 11, it was a little bit challenging here. We had the Mexican migration as they were trying to escape the drug war in Juarez, and then that reversed at about 2012 where people started to move back. And then our market slowed down, kept that way till about 2017, and then it started picking up steam until the pandemic came on and we had a big boom. So it feels more like the normal of, say, 2011, 12, 13, 14, 15 market. Number 2, housing affordability will continue to be a factor in total sales because we're not seeing the wage growth along with the price of the homes. Earlier this year, I'd reported that we had like a 45% increase in the cost of homes, but only a 14% increase in the wages from 2020 through March of 2024. So that's a huge increase in the cost. It was also had a cost of increase in the money, which was 65%, and wages were just at 14% increase in that 4-year period of time. So that's going to continue to be an issue. And yesterday I was at an Association of Builders meeting where Dr. Coronado from the Dallas Fed spoke to us. He said that's an issue all across Texas. It's not just here in El Paso, but as more and more people move to Texas, housing affordability continues to be an issue, and we're going to see that for many years to come, especially as more and more jobs come to Texas and the more opportunities come there as well. Interest rates have dropped recently despite the fact that the Federal Open Market Committee has held the overnight rate at 5.33% for a year now. August 1st of 2023, they went to 5.33%. They've held it there for a year. They say they're going to hold it there all the way through the election so that they don't influence the election. We'll see whether that happens or not. The jobs market is the big thing that they're looking at because they've got this inverse relationship between full employment and interest rates, and the 2% inflation is what they're looking at. They're trying to do that. But if inflation goes down, jobs go down. If inflation goes down, the job market goes up. That's the full employment part where you go to 5 or 6% unemployment and vice versa. So if you get inflation going up, the economy is doing good, but there's fewer jobs that are available because we get to full employment. So that's our report for the month of July. And if you've got questions about how this affects you in your home marketing or your home purchase, please give me a call. I'll be happy to discuss this with you. If you're an agent, I can show you how this works and how you can predict how many buyers are going to be in a neighborhood, and whether you're working with a buyer or with a seller, and we'd love to help you out either way. So for now, thanks for watching. God bless you, and make it a great day. Bye-bye.